Hello, now we are revising financial statement of NPO, not for profit organization. So basically organizations you can divide into two parts. One, whose motive is to earn the profit, whereas second one, the motive is not to earn the profit. Okay. In first one all the organizations will come, whereas in the second part it is the organization whose motive is not to earn the profit but whose motive is to provide a service to the society. That kind of organizations will come. For example, Infosys Foundation, Reliance Foundation, Rotary Club, your school colleges, right? So those organizations are called as not for profit organization, not for profit organizations. Okay. So what do you mean by not for profit organization, sir? Not for profit organization is a legal entity. Okay, it's a legal accounting entity whose motive is not to earn the profit, just like our sole proprietorship, partnership and company. But here this kind of organizations, the motive is to provide a service to the society, and motive is to encourage social causes, motive is to encourage cultural activities, sports activities, educational activities, like that. The motive is not to earn the profit. So motive is not to earn the profit. No sir, yes, motive is not to earn the profit. Do you mean they do not do any trading, they will not do any activity, I mean trading activity? They will do the trading activity. If they are not there in the existence to earn the profit, that doesn't mean that they don't do any activity. Yes, they do the trading activity, they do some activity, but from that they will not expect a profit. All they expect is some service to the society in a whole, or only to its members, might be restricted only to its members. For example, if you are staying in a flats, there will be an association of your flat, no? So those people will provide, that association is a not for profit organization, and the motive of that particular organization is to provide service to the people who are there in that particular flats, apartments. Okay. So final accounts, unlike the normal accounts where we prepare a trading account, P&L account and a balance sheet, here also we prepare three accounts: a receipt and payment account, income and expenditure account and a balance sheet. Receipt and payment account, income and expenditure account and a balance sheet. So if you ask me what is a receipt and payment account, I will say it's just the summary of the cash book without a date column. Summary of the cash book, that doesn't mean that single cash column cash book. Cash as well as bank, both items are considered. Okay. So what is cash? What is a receipt and payment account, sir? Receipt and payment account is just a summary of a cash book without a date column. Of course, salary, if you paid for a 12 months, you can't write a salary as some last date and you can give 12 months summary, no? So if you are giving a 12 month summary, date column won't come. So that is receipt and payment account. Whereas income and expenditure is nothing but a replica of P&L account. Income and expenditure account is nothing but a replica of P&L account, that is nominal account, which is prepared to ascertain the surplus or deficit, whereas P&L account is prepared to ascertain the profit or loss, right? Here we are going to ascertain the surplus or deficit. Okay. Balance sheet, you know that balance sheet shows the position of the business, right? Whereas your income and expenditure shows the performance. Basically a P&L also shows the performance, whereas the balance sheet shows the position of the organization, position of its liability as well as asset on that particular day. That's why we will write as on. Okay. Receipt and payment account, on what basis we will do, sir? Receipt and payment account we will do it on a cash basis. Receipt and payment account we will do it on a cash basis, whereas income and expenditure we will do it on a accrual basis, which is also called as a mercantile basis. What do you mean by accrual basis, sir? As per accrual basis, whether it's paid or not paid. I repeat, whether it's paid or not paid, if such expenditure is incurred for the period, we should consider it as expenditure for the period. Although it's not paid, that is expenditure for the period. So you should show it in the income and expenditure as a expenditure. when it comes to the income, whether it's received or not received, that particular income, whether it's received or not received, if that particular income is accrued, or if that particular income is earned during the period, we should show it in the period itself as an income, although it is not received. Okay. Next is that is also called as mercantile basis. Okay. In the receipt and payment account, cash basis, what we will do, we will not differentiate revenue and capex. No, revenue expenditure and capital expenditure is not divided. So just whatever will come in the cash book will come here, which means basically it contains both capital as well as revenue items. Capital as well as revenue items which are received or paid during the period. Everything will be considered. Whereas in the income and expenditure account, only revenue items will come. Also, those are computed as per the accrual concept, which means it is paid or not paid, that doesn't matter. If it's received or not received, it doesn't matter. All matter is whether it is for the period. Okay. Balance sheet, we know that it contains the balances of the capital item which is there in the business. The closing balance of this is nothing but the resultant of cash balance in the business. Okay. The closing balance of this account shows the cash and bank balance in the business. Whereas income and expenditure account shows a surplus or a deficit. What do you mean by surplus, sir? Where our incomes during the year is more than expenditures. Revenue incomes during the year is more than a revenue expenditures, that will be called as surplus. Whereas your revenue expenditures are more than incomes, it will be called as deficits. Okay. If you ask me what are the sources of income, I can say donation, subscription, entrance fees or admission fees, membership fees, legacy, endowment fund, revenue through operations, specific fund, etc. So if I go one by one, what is donation? Donation is nothing but a gift in cash or kind. Donation can be in cash or in kind, given by some person to the organization. Okay. Given by some person to the organization. For example, Ratan Tata sir is giving certain money to some of the NPOs to run the NPO. That is donation. Okay, you might have saw so many like donation things and all during COVID as well as after that also. Like that person donated so much and all. So now donation can be of two types. One is general donation, one is specific donation. Where the donor, the person who donates is a donor, no? Where the donor particularly says, boss, you have to use this particular fund for this purpose. For example, Ratan Tata sir giving me a money of 20 lakh rupees and he is asking me, boss, you have to use this for building a bus station. Then this is specific in nature and it should be capitalized. Okay. It will be treated as a capital item, whereas it is a general donation to run the organization, to run the need of organization, day-to-day need of the organization, that is general donation. Okay. So that will be treated as a revenue in nature. General donation where we will show it in the income and expenditure account, whereas specific donation we will show it in the capital. We will show it in the balance sheet in the liability side as donations. Okay, it is capital in nature, no? That's why it will be shown in the balance sheet. Next is subscription. Subscription is nothing but the members, to get the benefit from the organization, they should pay a certain money, subscription charges. Okay, that is income for the organization, expense to the members. So what is subscription, sir? Amount to be given by the members to subscribe for the service of the organization, that is called as subscription. And subscription is what? Subscription is revenue in nature, because every month or every year they have to pay. For example, you might have heard of football clubs, badminton clubs, so on, where they will pay every month or once in a year so much money to play, go and play there. So that is called as subscription, and as it's a revenue in nature, it will be treated as, it will be shown in the income and expenditure account. Next one is entrance fees or admission fees. This is paid at the time of getting admission to the organization. Okay, one time it is, one time. So how to treat it, sir? Simple, you have to look at whether question is silent or whether question is telling something. If the question is silent, as it is one time income, as it is non-recurring in nature, just capitalize it. How to capitalize it, sir? Just add it to the capital fund. Just add it to the capital fund. Whereas if the question is not silent, then do according to the question. That's it. Okay, sir, fine. Next is membership fees. Membership fees is same as your admission fees and the treatment is also same. Next one is legacy. Legacy is something where donor will say in his will, after my death, so much of my asset will go to this particular organization. After my death, so much of my asset will go to this particular organization. When he says it in a will, that is a legacy for the organization. Once that person, once the donor expires, I mean once he dies, the asset which he wrote in his will come to the organization. Such kind of asset or a benefit or a resource which comes to the organization is called as a legacy. Is called as a legacy, and we should capitalize it. Okay, we should capitalize it and we should show it in the balance sheet. We should add it to the capital fund and we should show it to the balance sheet. Endowment fund. Endowment fund, how it works? There is Mr. A. There is Mr. A. He gave, let us assume I am running a college ABC. I am running the college ABC. Now he gave me 50 lakh rupees. Mr. A gave me 50 lakh rupees and he asked me, boss, listen, you just keep it in the fixed deposit. You do not utilize it, should not utilize it, okay? Don't utilize it. You just keep that 50 lakh rupees in the term deposit, fixed deposits. Okay, I kept. Now, you will get a 6% interest on it. You will get a 6% interest on it, which is basically 3 lakh rupees, right? Now, don't touch that 50 lakh rupees, but use this 3 lakh rupees to give scholarship to the students. I repeat, don't touch that 50 lakh rupees. You give this, I mean whatever the income is generated through that particular fund, that you utilize it for some purpose, some cause. That is endowment fund. Okay, where donor will ask you only to utilize the income derived from that particular fund. I mean that particular fund is also yours fund only, but you can't utilize it. Only you can utilize it is the income derived from that particular fund. Okay. Okay. How it will be shown? Endowment fund, we will show it in the liability side and we will add the income generated through it and we will reduce the payments, I mean any expenses incurred through it. Next one is revenue through operation. Revenue through operation. Sometimes what happens, if you are in a basically clubs and all, you might be knowing where they will provide the restaurant service also. So that kind of things are there, no? You can do two things in your, I mean of course we know revenue is revenue in nature, it should come in income and expenditure account. You can show it in two ways. One, you can net it off, the other one you can show it in a gross way. How, sir? Gross way, how you can show the receipt in the income side, the payment relating to the same is in the expense side. That is gross. Net is how, sir? Net is income minus expenditure. If its expenditures are more than income, in the debit side the net amount, where income is more than expense, in the credit side the net amount. Okay. Next, where there is a separate specific fund is kept. For example, tournament fund. For example, tournament fund. We have kept a tournament fund of 50,000 rupees. Okay. We have kept a tournament fund of 50,000 rupees which is showing in the balance sheet. Now, if we incur any expenses relating to that particular tournament, we should write it off it first. We should write off that expenditure not in the income and expenditure account but in the balance sheet in that particular specific fund. For example, there is a tournament fund of 50,000. There is a tournament fund of 50,000. Now we are incurring an expenditure of 47,000 relating to the tournament. Now in balance sheet, tournament fund 50,000 minus expenditure 47,000, balance is 3,000. Balance is 3,000. Now the tournament is already done. After the tournament is done, what you will do with that 3,000 rupees? So you will just transfer it to the capital fund. Of course, if you go and take it to the income and expenditure account, the same thing comes. But the presentation wise way we should do it like this. So I repeat, where specific fund is maintained, we should write it off against the particular fund. If any expense is incurred relating to that, we should write it off first against the particular fund. Okay sir, fine. But what if the tournament fund is 55,000 instead of 47,000, where you have kept only 50,000 as a fund? That time 50,000, 5,000 is excess will be there, no, expense expenditure. That 5,000 excess expenditure you will take it to the income and expenditure account. The excess money which is required, the excess of expenditure over the fund, that money we are going to transfer it to the income and expenditure account. In the balance sheet, tournament fund 50,000 minus utilized towards the expenditure 50,000, the balance is nil. In the income and expenditure account, net tournament expenditure 5,000 in the expense side. If it's more, the fund is more, then directly we will transfer it to the capital fund, we will not transfer it to the income and expenditure account. Okay. Okay. And as I already told you, there is something called accrual concept, right? There is something called accrual concept. That is what the major kind of questions you can expect from this particular chapter. Okay. So accrual concept says what? Boss, if you have paid or not paid, that doesn't matter. If it's payable for the period, that is your expense. If it's received or not received, that doesn't matter. If it is receivable for the period or if it's earned during the period, it is your incomes. So income and expenditure is done that way. For example, now let's take a subscription. Now let's take a subscription. Subscription is our income, no? Okay. Subscription is our income. So let us assume in a receipt and payment account, what basis? Cash basis. What we will get? We will get a subscription received in received, right? Subscription received during the year. So subscription received during the year. But there might be certain subscription which should have been received during the year, I mean for the period, but we haven't received it, right? There might be a possibility that one of our member haven't paid a subscription yet. So although it's not received, don't you think that is relating to the relating for the period? Don't you think it is income of the period? Yes. So what we will do, along with received, we also add subscription outstanding for the period. Subscription outstanding for the period, which is basically your current asset, because it will going to give you a future benefit in the next year, because next year you are going to recover it, no? Next year you are going to recover it, so you are going to generate some revenue. It is a current asset. Whereas there might be a possibility that out of the money received during the year, he might have paid the previous year outstanding. Let us assume previous year some guy has to pay 10,000 rupees. This year he might have paid 20,000 rupees, whereas 10,000 rupees is for the period and 10,000 rupees is of next year, previous year. So of course, as it is not relating to the current year, but we have taken it, no, there received during the year, we should exclude it. Only this year's we should keep. So what I will do, I will reduce minus subscription outstanding of previous year. Where we will find that amount? We will find that amount in balance sheet of previous year current asset. Balance sheet of previous year current asset. Okay. Okay, sir. Fine. Also don't you think last year someone might have paid an advance for the current year? They would have given only 10,000, but they are telling, boss, take this 30,000 for the next 2 years. Or let us, for simple calculation understanding purpose, we will keep, they should have paid 15,000, they are paying 30,000, telling that next year's also I am paying now itself. I will be outstation, so I can't pay you next year, so I am going to pay you 15,000 now itself, that is of a next year. So basically, last year we received relating to the current year, which means in current year receipt it is not there, but it is relating to the current year. So what I will do, I will add advance received during previous year. Sir, where we will find this amount? We will find this amount in the balance sheet. Which it's a liability or asset? It's a liability. Reason is, the money we have received in the previous year, but the benefit is yet to give them. No, we have to yet to give them a benefit. So we are liable to give them a benefit in future. I am talking last year. So we are liable to give them a benefit. So where we will find, sir? Balance sheet of previous year, current liability. Also, this year we might have received next year's money, no? That is, this year we might have received certain advances, which is not of the current year, but it is already included here as we have taken the total receipt of the year. So we should exclude it, right? So minus advance received during the year. And where should we show it, sir? We should show it in the balance sheet of, we should show it in the current liabilities, right? We should show it in the current liabilities of the current year balance sheet. So after doing all this thing, what we will get, sir? We will get subscription for the period. We will get a subscriptions for the period. Hope it's done. Even sometime insurance they will give. Insurance also they might give prepaid. Prepaid means that is not of the current year, that is of the next year. We should exclude it from that. We should exclude it from our expenditures. And usually what they will give is, they will give a receipt and payment account, and they will give some adjustment, and they will ask you to prepare a income and expenditure account and a balance sheet. When they give an adjustment, you should check whether the capital fund they are giving, opening capital fund they are giving. If they are not giving opening capital fund, we have to prepare a opening balance sheet. Usually certain items of asset will be there, and also the opening balance of receipt and payment is a opening balance of cash, and certain item of liability will be there relating to some subscription, some outstanding expenses and all. The balancing figure will be capital fund. So first you have to do the opening balance sheet. You have to take the capital fund. That capital fund you should utilize it to calculate the current year, to prepare the current year balance sheet. Capital fund, usually what are the things will be there? Opening balance, add surplus minus deficit if any. If we taken any membership fees that we are going to do, that's it. Usually this is how it will be. So we are done with revision of this particular chapter. Hope you got a kind of brushing up of the whole concept. Okay, thank you all.